Give me some space, 'cause I'm not awake. I'm wide asleep, I'm wide asleep. Know what you think, I can't relate. But don't bother me, don't bother me. Back when I was young, I used to be the man. I stayed in my own world, you couldn't understand. So let's go back again, I can't take anymore. 'Cause everybody's sick of me, and I don't have any fun. Don't you get freaked out when the voices get loud? 'Cause I tell you right now, he keeps coming around. Take it all in and say everything like a machine, like a machine. But this isn't real, I need to feel something again, something again. Back when I was young, I used to be the man. I stayed in my own world, you couldn't understand. So let's go back again, I can't take anymore. 'Cause everybody's sick of me, and I don't have any fun. Don't you get freaked out?
How you doing, guys? This is Vlad, and here we are with another trade review, and also introducing the first complete model with the time cycles that we have been discussing. So, first of all, let's start with the trade. Okay, so it was a, what is it, 1018 1019 execution after we closed our manipulation cycle at 1012 and started the daily distribution cycle. Okay, immediately your eye should jump here at the SMT between these two cycles. Okay, it formed right at the very end of manipulation cycle and at the very beginning of distribution cycle. Okay, this is also after we took liquidity here during daily accumulation and here. Okay, so we took these and these liquidity levels. Okay, let's mark it with sell side liquidity. Okay, so when did we do that? We did it during the 950 to 1010 macro. Okay, so here's 950, this bullish candle, then 951, we take the liquidity, and then right at 1010 we go into this candle and then sweep the liquidity one more time, forming the SMT here, and then we displace higher. Okay, and then we have a retracement higher into the range which formed after 930 and back into the opening range gap. Okay, so the whole idea behind this is, again, guys, like always, you have to be able to build a narrative. Okay, this model using the sequences is nothing different. Okay, it's not a mechanical system, although it aims to be as mechanical as possible, but you still have to be able to build the narrative around it. Okay, like with every other model that ICT is teaching us, you have to be able to build the narrative. So what is the narrative here? So first of all, we have a draw on liquidity, this new day opening gap of today here. So that's the NDOC of August 18th, apologies of yesterday, electronic trading hours NDOC. Okay, so that's this green level here, box, whatever. Okay, so that's the first draw. The second draw, these levels here, they're the opening range gap. Okay, so from 930 here all the way to here, 29, 573, 574. That's the opening range gap of today. Okay, so these are the octants. You have the midpoint here in dark red, and you also have this dotted line here. It's barely visible. Is your 0.5 standard deviations here, and then we have one standard deviations, this red line. So you see how the market dropped all the way down to one standard deviation of the opening range gap before it did that liquidity sweep here, and eventually turned direction with a market structure shift, and then retraced back into the opening range gap. Also see the gap here, this CB that formed at the opening range gap low. So this is a candidate for revisit. Okay, so usually the market, when it forms a CB like that or a BC in the other direction, it will come back to touch that or feel it before it continues either down, or it retraces deeper up, and this eventually turns into an inversion fair value gap. Okay, but the point is that we have the narrative on our side. Okay, so we've spoken about new day opening gaps, new week opening gaps, and their importance uh, when these cycles flow from one to another, and SMT forms at these levels and everything. And very important here is also how you build your narrative around the other PD arrays, for example, opening range gap. So when you know how price trades around opening range gap, you can expect this retracement here. So even though if I miss today this entire move from 930 all the way down to 1010 here, 1011, I missed all that move. But I'm not worried about that, because then I'm given the opportunity to trade the retracement, okay? Using that same narrative, because I know that once we displace below the opening range gap this way with speed, we are going to come back to it, okay? Same with midnight open. This black dotted line here is midnight open. For those of you using the indicator, you're well familiar with that. And also we have already traded up to one standard deviation from the opening range gap. So the market is due a retracement at this point. So this market structure shift here for me is valid. Okay, it retraced here deeper than I wanted it to, but nevertheless it delivered beautifully and with speed. Okay, now let's talk about entry techniques. This is one of my favorite models for entry. And it's basically the classic market structure shift where, or a smart money reversal, where you have a low, then an intermediate high here, and then we form a lower low, and then displace in the opposite direction. And this intermediate high is between this CB and this BC. And that's what makes it so powerful, because all this creates an ICT breaker here, high probability breaker, which we can then trade at the BC here to logical levels of liquidity. So first partial here above this high, there it is. Second partial at the low of the opening range gap. So this black bold line is the low of today's opening range gap. So here is the exit. Okay. So very, 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 very simple. Okay. And if you look at this specific logic here, the classic 2022 model smart money reversal, this guys is so powerful in combination of these cycles. I have no words to describe how powerful this is. With proper risk management, this can make you a lot of money. Okay, so let's explore a few other examples of this model so you can really get a feel of how good it is. Okay. Let's go back in the morning. This is a trade that I posted on the channel. I basically caught the last leg down here, but the logic was the same. I just like when you I just happened to miss the initial part of the move, but then again, having the right narrative in mind and the way we displaced below this new day opening gap and here, so we displaced below it, then returned back to it, stopped at the midpoint and displaced again. So that second displacement is now my entry. It's the same as I was teaching you with first presented fair value gaps a while ago, okay, in the previous series. It is the same exact same idea, just the PD array is different, but it's once again an inefficiency. So new day opening gaps or first presented fair value gaps, these are inefficiencies. They price tend to book the same way around these levels. Okay, so you can use this exact same logic that I was teaching with first presented fair value gaps in order to trade this short to these relative equal lows. Okay, so it's very important to have logical level or pool of liquidity where price should roll to. Okay, so this move is like what is like 40 points. You don't need more than that. If you're able to spot this twice a week or 3 times a week, it's enough. Okay, now back to the smart money reversal. Okay, so here at the top we're obviously going from manipulation cycle, which ends here, straight to distribution. Okay, during the daily accumulation. So the parent cycle is accumulation. Now you have a similar thing happening here, where you have, I mean, it's a little bit, because of all this high resistance liquidity around here, might be a little bit more difficult for you to notice, especially as a beginner trader if you don't have enough experience. But this is basically the same idea. We have a low here, another low here. So can you spot the CBs that correspond, like the speed market showed in order to confirm that this is a valid market structure shift. Okay, so I'll show you immediately. There is two important CBs. One is here. So this will be an inversion fair value gap, by the way. And then the corresponding CB to this one will be here. Okay, which is your institutional order flow entry drill here at 512. Touch it, 1 point in it, and then we start dropping. So all these reversals, they occur the exact same way. This is the framework in which these reversals happen. Okay, so after we had the market structure shift here below this low here, we go back all the way to this rejection block and this order block, and then we displace. So we form another CB, which is then respected several times here, and then we displace one more time here, and we are provided with another entry to go short. Okay, this is what I spotted when I came on the charts this morning, and immediately the same model, like I said, with first presented fair value gap, entry, tapped it one more time, stop loss is above the midpoint of the new day opening gap. You can see it, you can see all this on the video that I've shared with the execution, and then a clean drop below these relative equal lows. Okay, so let's explore a few more reversals where the same thing occurred. Okay, so you can really get familiar how exactly price delivers this model. So if you watch this, we have a BC here. If I extend it to the right, we have a corresponding CB. 1, 2. So we have speed on the way up. We have intermediate low here into the BC at this wick. Speed on the way up, speed on the way down. When you see displacements or inefficiencies, that means speed. This is what we mean when we say speed. Okay? Inefficiencies. That's what speed is. Okay, so we trade back into it and into this wick, and then we drop, forming relative equal lows here, then we trace back here to the order block, and then we sweep relative equal lows, we go down. Okay, this here, this displacement, obviously it's a little bit more difficult to spot any relevant CBs. The first really distinguishable one is here. There's nothing wrong with that. And there is also a small little CB here, which a lot of traders will not be able to see. So there is one here. It's actually a suspension block. Suspension block with two relative equal highs here. That's why I'm saying it's important to learn microstructure, guys. These are very difficult to spot, but if you start spotting them, you'll be able then to figure out that this is an actual market structure shift. Like it's the real thing. It's a real market structure shift that you can use to trade up, okay, to trade long. This is the other one. Okay, Obviously, market retraces down below 50%. Let's use this FIP. Below 50%, you have to find the inefficiency. It's here. It's usually the one with the volume imbalance. If there is a volume imbalance, it's almost certain that we're going to trade into it. Okay? Trade into it, and then boom. Look at that. What a move. Okay? You can squeeze at least 2R in this move, no matter how large your stop loss is. Okay? Here, guys, we sweep the high. Obviously, a BC on the way up, with a BC on the way up here, with a corresponding CB on the way down. All right? Trade back into it here, back into the CB, and then we drop. Okay? So this is the thing, and this is the model that I want you to master. Okay? And yes, sometimes, like here, it's going to trade deep against your stop loss. See here? So we have the BC, which will be here with the volume imbalance. Okay, so that will turn into an inversion fair value gap. And then we also have the CB, corresponding CB here. Intermediate low and a corresponding CB here. The market trades up. The bodies, they stay within the inversion fair value gap, but the wick goes into the rejection block here. And then we displace one more time. And the second CB that forms here can be another entry. See that? Then another CB, which also keeps price lower. Do you notice how each next CB price respects it? Okay, respects it here, then respects the lower CB, then respects the lower CB. Obviously time distortion, and then eventually we go down. A little bit more time distortion and we go further down. Okay, so I want you to really pay attention to this specific model and this specific way of price reversing, because that's one of the easiest reversals to spot. Okay, take this piece of price action here again. You have obviously all this series of CBs on the way down, so you have speed, price goes with speed below this low, forms an intermediate high here, and then what happens on the way up? Volume imbalance, displacement, like a fair value gap or BC above this intermediate high, another volume imbalance, so this is now a suspension block. This candle opens, goes down back into this suspension block, but only at the top of the volume imbalance. It doesn't need to go down, which means what? According to Michael, it's really bullish. Then we go all the way up above this breaker with a displacement again, another suspension block. We trade into it here, and then we continue to expand above this pool of liquidity, new day opening gap also here, and ultimately relative equal highs, I'm sorry, here, like here, taken, and then we reverse. So I want you to remember this specific way in which price tends to reverse. And I want you to go on your chart and see how study and explore for yourself how you can find setups using the time cycles in combination with this specific uh, reversal pattern. Okay, and this, guys, can be your model to finally make you profitable, because this is really easy model to master once you know what to look at. Okay, and I'm giving you here the whole framework, the whole um, way how to build your narrative in order to really understand when this is a valid setup and when it isn't, and it's better to avoid. Okay, anyway, I hope you like this video. I hope the model makes sense to you. Let me know what you think, and please study the model, back test it, forward test it, on demo, of course, before you move to live funds. Make sure you know the model inside and out on demo first. Okay, so preserve your capital. And if you're new around here, you know what to do. Hit the subscribe button, smash the like, and I will uh, try to bring more content on the channel in the following days and following weeks. It's been a very busy schedule for me, so I might not post so often these days, but nevertheless, guys, I'm still here. You can always reach out to me if you want to discuss things. I'm very open to that. So anyway, until I speak to you in the next video, guys, thank you for watching, thank you for the support, and I'm out.